Betting on DraftKings in 2024 has proven a smart play so far. Stocks up about 9% year to date. That's outpacing the broader S&P 500. Our next guest believes this stock still has more room to run. And joining us now is Jed Kelly, Oppenheimer Managing Director, Equity Research. Jed, it is good to see you. So I wanted to start, Jed, with these reports that I think are really interesting. You called out in a recent note. These reports, Jed, that DraftKings is talking to Barstool Sports about this marketing partnership. I'm just interested in what you made of those headlines, Jed. Does that kind of make sense to you? DraftKings partnering up here with Dave Portnoy?
Yeah, and this is a potential partnership, right? Because it has to be after the Super Bowl with after the Penn lockup. Yeah, it makes a lot of sense to me. I mean, it's low eight figures, so that probably implies it's something near the 10 million range. I think Barstool's proven that if you have a good product, which DraftKings clearly has a quality product, Barstool is able to take their personalities, do engaging content and boost the brand. Now, it's not a game changer for DraftKings by any means, but the deal does make a lot of sense. If you look at the success Barstool had for something like a High Noon, we think it makes a lot of sense. So yeah, we like the partnership, and it's low risk. It's low risk for both for DraftKings, and it's obviously looks like a good deal for Barstool if it goes through.
So Jed, again, assuming it does go through, what are we talking about in terms of the material gain for DraftKings as a result of it?
I wouldn't call it anything really that material, right? We're talking about a $10 million advertising agreement. What it would do is you're still getting some of the most popular sports podcasts, right? Part of My Take's the number one sports podcast. Spitting Chicklets, the number one hockey podcast. Foreplay's the number one golf podcast, right? So you're giving them an effective medium. However, you take a step back. I mean, DraftKings is still going to spend well over $600 million of marketing dollars, probably even more. It's not that game changer. I think it makes sense. It was. If you look at our note today, it was like the fourth bullet point of our note. So it wasn't the crux of today's report, but we do like the partnership.
And Jed, looking at this stock, listen, it's been a monster, Jed. It's up 165% over the past 12 months, but you still like it here. What are the catalysts, Jed, that you think move it higher?
Yeah, what you've seen, right, is DraftKings in 21, right, when inflation was going up and interest rates were going up, the speculative stocks like DraftKings got hit. But now what has gone on is since the state launches, the velocity of the state launches have sort of slowed, you are now seeing these sports betting stocks prove to investors that they can drive material profitability, right? Like DraftKings next year is probably going to generate 56% incremental margins. So what is going to happen, right? As they're able to start to harvest meaningful contribution profit from vintage states, states that have been live since 2022, you're going to start to see them put up a big EBITDA number that makes a lot of your legacy gaming analysts, a lot of your legacy consumer analysts start to actually anchor a valuation to they can sleep tight at night. The other thing that we think is going to happen is they drive more profitability. They're eventually going to get GAAP profitable. What happens when they become GAAP profitable? You can start to become in the index, right? So we think for any consumer gaming investor, this is going to be a core holding. And if you look at their medium-term EBITDA guidance, I think they're looking for over $2 billion of EBITDA by 2028. You put a mid-teens multiple on it, you're talking a significant amount of upside from where the stock is right now.
Jed, the most formidable competitor for DraftKings now appears to be FanDuel. Flutter, the parent company, set to go public here in the U.S. on Monday, already listed overseas. Does that listing in the U.S., does that make any difference? Does that give them more firepower, for example, to compete against DraftKings?
It doesn't make a difference operationally. I think it allows more investors it gives them another option. However, and when we don't cover Flutter, but one thing I would point out is, Flutter, it's not a true apples to apples comp, right? Because Flutter, while FanDuel is operating awesome in the US, they have a lot of international segments that have been operating for over 20 years that are near a terminal growth rate or terminal margins, right? So it's not a core comparison. So yeah, could you get some people do a pair trade? for sure. I think if you look at right now competitively, Flutter's still holding a pretty decent lead with sports betting with FanDuel. They're doing a nice job with iGaming. I would say DraftKings is also doing a great job with iGaming. But the one thing too, if you're kind of comparing the two names, if you still like DraftKings, is DraftKings has more room to make up with the hold, right? I mean, I think DraftKings structural hold somewhere around 8.5%. FanDuel's about 12.5%, right? So DraftKings has about, call it 400 points of hold they could potentially make up. So you kind of have a little more room to grow. But both companies are operating very well in the U.S.
All right, Jed Kelly, thanks so much. I really appreciate it. Set up also ahead of those DraftKings earnings in a few weeks. Appreciate it.
Thanks for having me.